Hey, what it do? What's good, YouTube? It's your boy Steezy Banks here, as you already know. Welcome back to my YouTube channel. Please do me a small favor, like, subscribe, and turn on that post notification. To those who are new here, I document my life as a pro forex trader, still coming up, and yeah, I'm recording my progress so that I can inspire or motivate some of you, so to show you it's possible to make it in this forex trading space without anything. So yeah, let's get into the video. So basically right now I'm at the trading flow, and as you can see, let me try and show you on my laptop right there. I took a trade. I took a trade on I don't know if you can see. Yesterday we took this buy and it hit our stop loss, and then today we are currently in a smaller profit on Euro USD. So yeah, that's the update, and I'll update you on this trade. Like, it is what it is, man. Like I had a challenge whereby I was going to raise 42 rands to 1000 rands. Guys, guess what? I failed the challenge on the first try. So what I'm going to do basically is I'm going to fund again, I think tomorrow or next week. Then I'll start the series of flipping accounts and everything like that. So yeah, let's get to the video. So guys, like, check me out, dog. Like, I now have the beards. Yeah. Tell me what you think about these beards. Do they look good on me, or check me out? Comment. These are these.
LR on the beat.
Like, now I want to show you my trading strategy, like the basic of my trading strategy. I know most of you like always DM me each and every day. They want, like, most of you want to know the strategy that I use. I use Elo12 mixed with SMC, but today I'll go with basics of Elo12 because Elo12 goes deeper into the market structure than all those, like, a lot of strategies. I'm not saying it's the best strategy, but I'm saying it goes a little bit deeper into the market structure and everything like that. So right now, let me walk you through the basics of Elo12. Here goes the whiteboard. So you already know, like, when I'm at the whiteboard, what's going to happen. So let's try to clean it out and about Elo12 now. I hope you can hear me or see me, but this is the whiteboard. So Elo12 basically, guys, let me remove my pod. So Elo12 is a strategy that, like, on Elo12 only, like, look for two things, which is if it's not an impulse, it's a correction. If it's not a correction, it's an impulse. So you need to start it like only these two moves. So what is an impulse? I know most of you know what an impulse is. Let me try to bring this a little bit closer, like this. So what is an impulse? An impulse basically, guys, it's a move that it's more of time than price, you understand? So on our MT book or on our trading view, this is what we have. We have a chart like this. So here goes the price, like 1.30 what 1 point, like this is the price, this is the price, this is the price, yeah. And over here, this is the time, and this is the time. This is where you see, like, the time. Let me show you like this. So this is where you see the time. So an impulse is a move that it's more of time eats more of price than time. What do I mean? It eats more of time than price. Sorry guys, it eats more of price than time. So it means that's the move that you basically look for when you are trading anything, be it currencies, be it whatever you trade. So a correction, so that's an impulse. So what's a correction? A correction is a move that eats more of time than price. So a correction is a move that like moves on the same time, on the same price, but taking a lot of time to move. So that's a correction. You understand? So whenever you have an impulse, market gives you a correction. Whenever you have an impulse, market gives you a what? A correction. Each and every time, market needs to correct so that you can get the next possible move. That's number one of Elliott wave. Then number two, we have rules and guidelines. We have rules and guidelines. In Elliott wave, you understand. So these rules and guidelines, basically, let me tell you a bit. We have what we said we have an impulse in the correction. So we have 5 waves. Each and every move, we have 5 waves or 3 waves. So let me start by a 5 wave. A 5 wave move is a move that gives you an impulse, then it corrects, then gives you an impulse, then it corrects, then gives you an impulse, then it corrects. You understand? So let me remove this for now. So as you can see, this is wave 1. Wave 1 is an impulse move. Wave 1 is an impulse. And wave 2 is a correction. So it basically means wave 1 is the move that we need to trade. We need to trade when the market is active, and then avoid trading when the market is correcting, is moving at the same time, like, you understand what I mean. And then so we trade wave 1, and then wave 2 over here is a correction, and wave 3 is a what? Is a impulse again. Wave 3 is an impulse again, and wave 3 is the largest wave. So I will talk about the guidelines. Right now I want to show you the impulse and correction. And then wave 4, this wave 4 is a correction. Then wave 5 is an impulse. Wave 5 so how many impulses do we have? We have impulse on wave 1, we have impulse on wave 3, and we have impulse on wave 5, which basically means we have 3 impulses. That means we have 3 chances to make money in the forex market. Depends on any time frame that you are. So after seeing these impulses and correction, where do you get your entries? You need to get your entries on these laws of your corrections. On the laws of your corrections. That's where you should look for entries. That's where SMC comes into play. That's where I use SMC on these areas to find my entries. But as for the market structure, I basically look for these things right there. This is basic. This is not everything. When you go to your charts, like for the first time, it will be difficult to find these things. So this is an impulse. This whole move, like this whole 5 sequence, is an impulse. Though we have impulse correction, impulse correction, we mark it 1 to 5 as a correction. Then we have what we call corrections. So like on the correction part is where that's the trickiest point, because these days 90% of the time market is always correcting, guys. Market is always correcting 90% of the time. So you need to study the corrections so that you understand the impulses. So let me walk you through the corrections. We have 2 types of corrections, 2 types, which is a flat and a zigzag. But let me tell you more about the flat right now, then we talk about the zigzag later. I know most of you know that the zigzag, but it's just different names. So over here we have a correction. Let's say we have an impulse. We have a correction, what we call a flat. The flat is a correction that eats more of time. You understand? More of time than price. So we have a correction like when price start to trace, it gives you like a zigzag. Then it gives you another zigzag to the top. Then it gives you another move to the downside, like it's a ranging market. Then it breaks to the upside. That's a correct. This is called a flat. This one is an expanding flat. What do you say by expanding flat? Expanding flat is breaks the high and respect the low. then it moves to the upside. Then that's the expanding flat, expanding flat, expanding flat. Then we have what we call a regular flat. A regular flat is when we have an impulse, then market zigzag to the upside, zigzag to the downside, then it moves to the downside, then it moves. This one now, it respects the high and respect the low. This is a regular flat. So whenever you see price respecting the high, when you see a correction, you should know that on these points, price must come and take out liquidity. That's where SMC comes into play. I'll tell you about SMC later. Then maybe we have an order block here, price respect the low, then you get another impulse. So with these corrections, you get accurate entries. Then we have what we said we have an expanding regular, and with the last one, which is an impulse. Then we correct, then we break the highs, then we break the low. Sorry, this one is an expanding. This one is an expanding. It breaks the high and breaks the low. This one it expands, breaking the high and breaking the low. So the first one that I was talking about is the we have the regular expanding and like the name, it's too much knowledge. So some of these things I won't remember. But this is on this. So these are for the flats. These are flat patterns. Then we have what we call a zigzag. A zigzag is whereby price gives us an impulse. Then we get a zigzag like this. Some of you call it a flag, but on the LTO we call it a zigzag. So this zigzag must retrace back to 61 percent Fibonacci retracement. So if it doesn't get to these areas, we get what you call a double zigzag. You understand? We get what we call a double zigzag. So let me show you what I mean. Let's say we have an impulse, then it zigzags like this. You see? And then this is like level 31% of Fibonacci. It basically means this zigzag is a failure, so it has to zigzag again. It has to give us double zigzags. So it impulse again, it gives us another zigzag to the upside. That's when we know that this is going to respect this high. Then it gives us another zigzag coming to what? Coming to the premium level like 61 or level 79% around there. So that's when we successfully call it a zigzag like this. You understand? So these are the rules and guidelines. So let's talk about the rules and guidelines of an impulse. Rules and guidelines of an impulse and rules of and guidelines. Yeah. So an impulse, we say an impulse has 5 waves, which are impulse correction, impulse correction, impulse correction. So let's say we have an impulse, then we have a correction, then we have an impulse, then we have a correction. You understand? So this is wave 1, this is wave 2, wave 3, wave 4, wave 5. How do you know that this is wave 2, this is wave 4? You see by correction. So we should have corrections here that we know it's either an expanding flat, so it's either a flat pattern or it's either a zigzag. You understand? 2 or any of these patterns should be either on 4 or on 3. So after seeing this, now let's talk about the rules and guidelines. Wave 1, wave 2 should not retrace 100% of wave 1. Basically means this zigzag must not close below this area. This is our invalidation zone. This is our invalidation zone. If price retrace back to this point, it basically means it's no longer a correction. I don't know which correction or which move we have over there. We start to do our analysis again. So that's the first guideline. Wave 2 should not retrace more than 100% of wave 1. So it basically means if you put your Fibonacci retracement 2 from this point to this point, price should not go back to the low or to the 100% like a double bottom of this whole move. That's a red flag on its own. So then guideline number 2, wave 3 must be the longest wave. Wave 3 must be the longest wave. This basically means wave 3 must be the longest wave. You understand? This wave 3 must be the longest wave. It must not be the shortest, or it must not be whatever it is, it must be the longest wave. So third guideline is wave 4 should not trace back to the end of wave 1. Wave 4 should not retrace back to the end of wave 1. You understand? So which means this wave 4 should not come back and retest the resistance or the resistance of wave 1. Like here, let me show you wave 1, wave 2, wave 3. If it retraces back to this point, it basically means we don't have any wave 3. This whole move is now a correction. We call this whole move a zigzag. Like this price might literally do something like this. You understand? So price has to play above with this area. It doesn't have to come and touch this area. So once it does, this is no longer 1, 2, 3, 4, 5. We now count this as A, B, and then this is now C. You understand? But I don't want to rush you to those things. As for now, these are the rule and guidelines. And then the last guideline is wave 5 is the shortest or the extended wave. On wave 5, we might get a wave like this 1, 2, 3, 4, 5, and so price might just come here, then drop. It might not end this wave 5. We call it a failure, or wave 5 might extend, like it gives us another continuation of waves, then it drops like that. I don't know if you have like seen such scenarios like this. So this is for the L12 guidelines on the correction, on the impulsive move. Then basically this is my strategy L12. I hope you like the video. Make sure you like, subscribe, and turn on the post notification. Yeah, that's it for today, man. It is what it is. Peace.